selling and then buying a home with the finance family. How does it work? In this seminar, we're going to cover off what are your options, whether it's a bridging loan, investment loan, or a simultaneous settlement, commonly asked questions, where to from here, and then finally, questions to be answered. What are my options? Bridging loans. This is arguably the most stress-free preferred option, but it comes with the highest requirements. A true bridging loan allows you to buy a property before you've sold yours. Why is it called a true bridging loan? Because most banks offer a version that require you to prove you can afford both the old and new loans. A true bridging loan only requires you to prove you can afford the loan that will be left at the end after the sale. Sounds great. What's the catch? You need to have approximately 50% of the equity in your home available to help secure the new property. There are definitely some exceptions to this, but it's a good rule of thumb. Only one bank really does these true bridging loans, so options are limited to say the least. The investment loan. Sometimes you don't want to sell right now. You might be able to turn your current home into an investment and still buy a new home to live in. You still need to have equity in your current home and also possibly some savings in the bank, but definitely less than a true bridging loan. The pros to this are you can hold property for longer. Imagine if you hold for another 10 years, and every year on average the value goes up even 3%. A $650,000 house would be worth over $870,000 after 10 years. And if a renter is helping to pay the mortgage, you end up significantly better off. The cons to this approach is that you do need to demonstrate really good income to afford both loans, and be prepared for some of the headaches that come with having an investment property. Although having a good property manager with a reputable real estate agency goes a long way to reducing the stress. The simultaneous settlement. This is the most common way of selling and then buying. You would need to get a pre-approval subject to the sale of your current property. Next, list your property with an agent you trust that gives you the best chance of selling for the best price. Require a longer settlement period on the sale, say 90 days, with the option to bring the date forward closer if needed. While you are selling, look for houses that you want to buy within your pre-approval range. Make an offer and purchase once you've sold your property. After approval, your conveyancer will help to get both the sale and the purchase dates to land on the same day, straight out of one house into the other. The pros to this approach is that basically every bank can do this. The cons, a moving day can be a little busy, as you need to get everything moved across on the one day. It also means that deadlines are quite tight and there is little room for error. Commonly asked questions. Is now a good time to sell? As long as you are getting back into the market, then the right time to sell is whenever you are ready and it meets your needs. Imagine the property market is a ski lift. The chair is your house. As long as you get off, that is sell, and then get back on, buy. You're not missing out on anything. Only when people get out of the property market and rent for a year or two do they see the houses they can afford to buy get pushed further and further into the outer suburbs, or smaller and smaller for the same budget. Why do I need to do a whole new application? Well, even though you have a loan now, anytime you enter into a new contract, the bank is obliged to reassess your ability to pay back the loan. If I borrow against equity for the new purchase, how do I pay the deposit? I don't have savings, I have equity. You would use a deposit bond. Our trusted provider is Deposit Assure, backed by QBE. For a fee, you pay for a Deposit Assure to provide a certificate to the vendor, the person you just bought a house from, that promises they will get their money. It's very common in all states of Australia. Do I need a conveyancer? Absolutely. We have our preferred conveyancers, Conveyancing Family. The Google reviews speak for themselves. A good conveyancer versus a bad conveyancer will make all the difference in the world for your experience. For the sake of $200 to $300 on the price, you would much rather avoid the stress of a missed settlement, penalty interest, or the risk of losing your deposit. Where to from here? Get an appraisal on your property from a real estate agent that you trust. If you'd like a recommendation for your area, ask us, we may be able to help. Book in an appointment with one of our brokers to go over the 3 options and provide your information so an assessment can be done to determine your eligibility for each. Get a pre-approval, list your property, and start looking for your dream home. Time for questions.